Welcome back to the post-lunch and final session of our conference. Anax means leader in ancient Greek, and Anax Metals is leading the way in sustainable copper production at its flagship Whim Creek project, located in the Pilbara region here in WA. Whim Creek has been mined intermittently for almost 150 years. Anax is finalizing a definitive feasibility study to bring the project back into production by 2023 by applying ore sorting technology and other technical innovations to maximize the value of the copper zinc resources while minimizing the environmental impact. Geoff Laing is Managing Director of Anax Metals, and he's here to tell the story. Please make him welcome.
Well, good afternoon, everyone. I hope everyone had a good lunch, and I'm very pleased to be here to be able to tell you a little bit about Anax Metals and our journey to becoming a sustainable copper producer in the Pilbara. I will step through the obligatory disclaimers. So I'd like to start off this discussion just touching on the copper market, because it's important that people understand where the opportunity is that we're effectively exploiting. I think everyone would be well aware that copper demand is on a growth trajectory and probably going to turn into an exponential growth trajectory in coming years. When you get reports from the likes of Wood Mackenzie and S&P suggesting that in the next 5 to 10 years, there'll be a shortage or deficit of around about 9 million tons of copper, and that by 2035, copper demand will have doubled from where it is at the moment up to about 50 million tons. So the demand side will be there. The supply side is where the challenge is and where the opportunity we see. Many of you will be aware that global copper grades are in decline, which means that projects need to be bigger to attract the economies of scale. It's harder to find new copper projects, and it takes between 10 and 15 years to get a new discovery through to production. 10 to 15 years. We're talking about deficit in the next few years. So where's all this new copper going to come from? The green revolution creates an opportunity on the demand side, but it also creates lots of challenges on the supply side. Bringing new copper projects into production is challenging. Any commodity is challenging, but as the environmental constraints get tougher and tougher, it gets much harder to get projects into production. It gets more expensive, more onerous. And so the potential growth of supply is going to come under more and more pressure. So we've seen an opportunity, although the number of copper projects out there is certainly not growing at in the numbers that are required. There are numerous smaller, high-grade projects. There's an abundance of them out there. And using a mix of smart technologies, one is able to bring these projects into production, monetize them, and deliver green copper into a growing market. And that's exactly where Anax is. We've now built up a team that's able to do that. And I hope that through this presentation, talking through what we've done at Whim Creek, you'll see that really the accumulation or consolidation of smaller high-grade assets is a very viable way of supplying, at least in a small part, into this copper deficit that's going to occur. So what about the Whim Creek project? We acquired it. We acquired an 80% interest in it 2 years ago from the then VentureX Resources, now Developed Global. And we moved very quickly into running out various studies. We've progressed. We're a long way down the track with a definitive feasibility study, which we expect will deliver towards the end of Q1 next year. The studies that we've completed so far show that we can deliver a very attractive project with robust free cash flow. It'll have a 7-year mine life, and it'll produce in the region of 10 to 12,000 tonne a year of copper equivalent. And I say copper equivalent because it's a polymetallic project. So it's got a resource base of about 11 million tonnes at 1% copper, just under 2% zinc, and about 0.5% lead with some silver and gold credits. Where the copper is by far the dominant element, but the zinc and lead provide useful byproduct credits. Importantly, with the strategy that we're rolling out, we're able to utilize the existing infrastructure, and Wim Creek sits within a well-established mining zone. It sits 120 kilometers south of Headland and north of Karratha. We're exactly equidistant. We sit behind the iconic pink Wim Creek pub. Many of you will know it, will have driven past it, may have even had a beer there. We're hoping to bring that back into operation in conjunction with the owners of that pub, who are the Nalama Group, who are the traditional owners in the area, and we're working closely with them on that. We plan to produce sustainable copper within the next 18 months at a low capital intensity using some smart technology, which I'll tell you about in a second. And importantly, we've attracted the attention of Anglo American, who have offered us 20 million subject to the 20 million US subject to the outcomes of the DFS in project financing. Their interest in this project, it's a relatively small project in the world of Anglo American. Near-term copper production is so hard to come by, and they can see not only the near-term copper production from Wim Creek, but the growth potential from our strategy as it rolls out. So what about the strategy? We're using particle sorting, a combination of particle sorting technology, along with other gravity separation, to effectively shrink down the volume of ore that we process. And it's not possible with all ore bodies, but in these VMS ore bodies, particularly up in the region where we are, they're very what we call heterogeneous, and you're able to effectively pluck out those particles that have got the sulfides in them and only process the high-grade valuable material. What does this mean for us? Here you can see the Wim Creek project in the orangey color. We sit at the centroid of about 10 to 12 other VMS projects. So we're in really a domain of VMS projects that could potentially ultimately bolt on to what we've got. We've already got a very robust project that we'll build ourselves, but the technology that we're using enables the monetization of other small high-grade VMS deposits. And it's these deposits that you see we're showing a 100-kilometer radius around us. And in fact, we can go further afield than that. So it's important because essentially once we've got a processing hub in the Pilbara, we'll become a focal point for other explorers in the region that have deposits that are looking for a processing solution. And that's all the more so because the permitting for new process infrastructure for tailings becomes more and more difficult. We'll have that all in place. Just a little bit about our team. As always, it's most important to have the right team to deliver on your goals. And we've got an experienced board, right mix of skills. Our chairman's a solicitor. We've got engineering skills. We've got commercial and finance skills. I'm a chemical engineer. But more importantly, the team, our management team we've built up is our major asset. We've now got a team that's an in-house team, along with our technology partners, Nexus Bonham, that covers the whole span of disciplines that are needed to roll out this strategy, including geologists, environmental scientists, and of course, engineers, both mining, mechanical, processing. So this is incredibly important as we move into this phase of development. And I believe that we're hitting well above our weight for a company of our size in terms of the team that we've developed. On the corporate slide, 400 odd million shares on issue. End of last quarter, we had about 5 million in cash. We've got listed assets, which we're divesting of. That takes us to NTA of about 6 million. So we've got some cash, and we've got a market cap of about 27 million at the moment. Right, here's the engine room. This is the Anax flow sheet, and very simply, it's all about initially open pit mining, crushing, going through an ore sorting and gravity plant, where we'll shrink down what will be essentially an 800,000 ton per annum mining rate. That gets shrunk down to about 300,000 to 400,000 tons. That goes through a traditional concentrator. That's a polymetallic concentrator, will produce copper, lead, and zinc concentrates. That's the main part of the business. But the key part of that is the reduced scale of processing infrastructure. We're using the existing infrastructure plus the small concentrator allows us to deliver all of this with a low capex. Then sitting behind that, we then strip out from the rejects of the sorting plant, the low-grade material that goes onto the existing heap, which we have at Wim Creek, which was built by Straits back in about 2005, 2006, and we'll bioleach that to recover the remaining metals from that. That's a very low energy intensive process. And because we've got all that infrastructure there, it makes sense that we can do that at the same time as running the concentrator. And then finally, we strip out the barren aggregates. Once we've removed all the sulfides, we've got this material that's either going to be engineering fill, or we're actually currently in the process of looking for markets where we can sell it as aggregates. So we're repurposing what would essentially be waste. And in this process, we've been working with technology partners such as the CSIRO, Gecko Systems, who are specialists in modular plant. They'll be designing and building our plant. And of course, as I said, our technology partners, Nexus Bonham. I just dropped the slide in here. I just wanted to show you, this is Mont Capri, which is where we'll start our open pit mining. You can see here, it has previously been mined by Straits. But what I wanted to highlight here, this is a typical VMS style deposit. So you get the high grade material all sits in a cap at the top. So we've got zinc high grade material with copper high grade material underneath it. That's good for us because it de-risks the project. We essentially encounter the high grade material first. And then when you go underneath that, you get into what they call the stringer zone or the stockwork zone. And that's where the ore sorters really earn their keep, because that's where you're able to strip out the high grade stringer material from the background low grade material. This is a cross-section of Evelyn, and we put out an announcement this morning talking about underground mining at 2 of our satellite deposits. This is one of our satellite deposits. We did some drilling here around about September, and you can see the very high grade intercept that we had below the current resource. So 30 meters at 4.5% copper, 3% zinc. This is only 170 meters vertically down. This deposit we expect will grow. It's open at depth. Those 2 shoots could join together. And this is one of our growth areas. And this is the reason that we'll roll out our feasibility study next year, because we're now looking at an underground at this deposit. Salt Creek, similar story. We reviewed the resource and we found that the resource is actually a lot more continuous than we'd expected. In delivering that process, we doubled the quantum of copper in that resource, and the zinc went up by about 25%. But most importantly, it turned out that the resource was more continuous. It will be an underground high-grade mine, and again, a satellite deposit. It's important to note also, these 2 mines essentially provide a blueprint for other small underground mines within the region, where I showed you that map of the Pilbara region, where we'll ultimately look to consolidate assets within the Pilbara. So here we've got the 3D model of the state-of-the-art ore sorting plant, and you can see an ore sorter in the left-hand corner there shooting out. And this is Wim Creek material. This is our material that we've been testing on a commercial ore sorter. So it's quite unusual to be able to do this. Metallurgically, often you're using scaled down equipment to do test work on. We're using commercial machine here. Importantly, the technology delivers great benefits from an economic perspective and a carbon footprint perspective. You can imagine if you're shrinking down the volume of material, you're reducing the power by more than half, reducing the amount of water, reducing the chemicals that are used. So not only are we delivering leveraged financial outcomes, but we're delivering measurable carbon footprint reductions. And that does put us ahead of many of our peers because we can demonstrate the measurable benefits. And finally, the aggregates also repurposing what would essentially be waste. In terms of timeline, the focus now is Q1 next year. We're looking to complete our definitive feasibility study and approvals. We're hoping it dovetails into either end of Q1 next year or early Q2 next year, aiming to get into development construction into the second half of next year. On the exploration side, I'm running out of time, but my colleague Wendy, who's in the audience here, has been doing a fantastic job with her team. We're in the emerging gold province in the Pilbara. We're on the western boundary of De Grey, and we've been doing good work using ultrafine techniques. We straddle the Wim Creek Greenstone Belt, and the prospectivity is good. We did some drilling back in September, and we look forward to getting results of that out to you soon. We have other exploration projects as well down at near Ravensthorpe at Mount Short. So just finishing off now, we've done a lot of rectification work on site. You can see here we've rebuilt ponds. This has all been required to further our approvals process. We're complete with all of that, so our approvals process has advanced well. We announced this morning that we have our works approval in place. We have our mining proposal in place. This is all very important for maintaining the environmental integrity around us, and will be very useful in the project going forward. So in conclusion, we're aiming to be a copper producer in the next 18 months. Low capital development cost, producing about 12,000 tonne a year of copper equivalent, very robust cash flows, and huge opportunity to expand, use this strategy to consolidate other assets, both in the Pilbara and further afield. I'm out of time. Thank you.
Falcon Metals listed just over 12 months ago via a demerger from Chalice Mining. Already it's made great progress at the Pyramid Hills Gold Project in Victoria, in one of the world's great gold mining centres of Bendigo. Here to tell us all about it is Falcon Metals Managing Director Tim Markwell. Make him welcome.
Yeah, thanks, Jerry, and thanks to the RIU for the invitation to Falcon to present here today in Perth. So for those of you who don't know Falcon Metals, we're as Jerry said, we just demerged from Chalice Mining last year. Chalice discovered a pretty phenomenal ore body in WA in March 2020, but prior to that discovery, their flagship asset was the Pyramid Hill Gold Project in Victoria, which is one of the premier gold regions in the world in Bendigo. So it was a fabulous asset, but obviously Chalice had a lot to do with Julimar, given it's such a big prize. So they made the pretty sensible decision to spin out Pyramid Hill with a couple of other assets, and we raised $30 million on the ASX in December last year, and away we've gone. And now before I continue, that gold up on the screen there, that's just not any picture. That's gold from a drill intersection we released in July this year at Pyramid Hill at a project called Ironbark. As you can see, pretty spectacular stuff, and I'll talk a bit more about that in a minute. So there's the standard disclaimer. So here's Falcon in a nutshell. We've got Pyramid Hill, 5,000 square kilometres plus in Bendigo, the world's premier gold region. It's 60 million ounces, truly spectacular country for gold, and I think really coming into its own in the last few years. So that's a very strategic asset. We've already put out good results, and we're about to commence a pretty major drill program starting in December. We've also got two WA assets, Viking, which is in Norseman, and off to a good start there. We did our first RC program just recently, and we put out some great results on Monday, which I'll talk about. And we've also got a bit of a sleeper in the portfolio called Mount Jackson, which I'll touch on at the end. Quick corporate snapshot. Our shareholder base still largely reflects Chalice, given we demerged from Chalice. There's no residual ownership. It's all gone straight to Chalice shareholders, plus the new people that came in at the IPO. Tim Goyder, largest shareholder, Franklin Templeton, one of the world's large institutional shareholders, obviously a big Chalice shareholder as well. And Goldman Sachs have been accumulating on market. Share price of around 21.5 cents. That gives us a market cap of 38. But importantly, we have 24 million of cash, which is a great asset at the moment, and that gives us the firepower to do what we want to do. Our EV is only 14 million, so I think we're pretty good value given the strategic value of the assets that we do have in Falcon. And just quickly on the board, we've got really, this is part of the reason I came to Falcon. Mark Bennett is a bit of a superstar in the exploration industry. He's discovered multiple ore bodies that have been taken over, including the Nova Bollinger nickel deposit in WA that was bought out by IGO. So he's great to have. He lives in Melbourne, where Falcon is based. So it's great to have someone of Mark's calibre in Melbourne to draw upon it as required. And also we've got Alex Dorsch on the board. So as many of you probably know, Alex is the MD of Chalice. He was the MD when they discovered Julimar, and he was also the guy in Chalice that pegged the Pyramid Hill project initially. So he's got great passion for Pyramid Hill, and it's great to have Alex's ongoing involvement. Rounding out the executive team, we have Pradeep, who's a very well-regarded CFO. He's been at Sarara and Casbar and a few others. He knows what he's doing. And we've got an exploration manager, Doug Windsor, who's Bendigo born and bred, which is great. He knows the region like the back of his hand. He spent quite a bit of his career flying all around the world with BHP and De Beers, so he's been looking at world-class assets everywhere. He came back to Australia to work for IGO and ran the exploration for IGO up in the Kimberleys and the Northern Territory, and he's come back to Bendigo, where he lives. He lives very close to our projects, actually, and he's there to find the big one in Bendigo. So moving on to Pyramid Hill, this sort of slide says it beautifully. That's like a tenement map of the Bendigo zone, and you can see our permits are in the dark blue here. So we dominate the Bendigo region, which is that is a strategic asset. And the important thing to know about this picture is that red line. That's the boundary between the southern part, which is outcropping Castlemaine Group stratigraphy. They're the rocks that host Bendigo, 22 million ounces, Fosterville, 9 million ounces. And as some of you may know, Fosterville is the world's highest grade and most profitable gold mine, and it has been for a few years now. So this is a truly spectacular asset, and that's why Bendigo is really coming into its own in the last few years. So that's below that red line. Above that red line, you get the same geology, the same stratigraphy, but it goes under some Murray Basin sediments. So the old timers sort of just ignored it because the quartz veins were sticking out of the ground in Bendigo and Fosterville and Ballarat, etc. But as soon as you go above that red line, it goes under a little bit of cover. And it's accessible with an air core rig. You can explore this, and we've shown that that's possible. So above that red line, the Victorian government believe there's 32 million ounces as a mid case of undiscovered gold. So there's a very big prize here indeed. There's every chance there's another major ore body to the north of that red line. And I think you'll see we've got the biggest share of permits above that line and the best chance to find something. So that's what we're about. We've got hundreds of kilometres of prospective structures on our permits under that cover. So I think there's every chance that we can find one of these ore bodies. Before I move on, I'll talk mostly about Ironbark. Oops. Ironbark, which is there in the middle. That's where that front picture came from. Carry up the north and Wandoo here in the middle part. Wandoo is interesting because Wandoo is only 20 kilometres from Bendigo. And as you can see there, it goes under a little bit of cover. So it's never really been properly explored, even though it looks like a very good target to us. And it's quite extraordinary that you can get a target like that so close to Bendigo, where 22 million ounces were mined. So moving on to Ironbark, our previous exploration here showed that there was gold potential in the Castlemaine Group stratigraphy that hosts Bendigo and intrusive rocks called diorites. And this is what we looked at. This is a hot off the press image. This is some drone air mag we only got this picture on the weekend, so we haven't fully assessed it yet, but I thought it was a great backdrop for this slide. So we first started drilling at Ironbark North and Ironbark South here. You can see the diorites stick out here. We got some reasonably good numbers. But last year we did a line of air core over here because this looked like it was an interesting structure and could be a diorite. And we got 13 metres at 1.5 grams that was open at depth, and we got another 9 metres at 0.9. So they were pretty good results. And diorites are great targets in Victoria. There's several diorite gold mines in the eastern part of Victoria in the Valhalla goldfields. And the one we like to look at or compare it to is Cohen's Reef, which that was 1.5 million ounces at 32 grams. So diorites are great targets. So we're pretty excited when we got these numbers out at Ironbark East, and that was before we IPO'd. So when we IPO'd, the first thing we did when we got an air core rig was go out and we drilled 37 holes around those drill holes, and we released those results in July this year, and that was where the gold from the front page of this announcement, this presentation came from. So it's better to look at that information in cross section. So air core hole 1030, it returned 40 metres at 2.8 grams, including 26 at 4.2, and you can see all the 10-gram hits there. So this was truly a spectacular intercept with lots of free gold, lots of coarse gold. The interesting things to note about that intercept is the top 2 meters had quite coarse and nuggety gold, as you saw from the photo. So there is the potential for some smearing down the hole, but that gold has not come from very far. This is angular, coarse gold. We think it's very proximal to the source. And also importantly is there's evidence for primary mineralization down the hole in the diorite, which is what we're looking for. So this is a very interesting result for us. There's a lot of gold in this cross section now. This is still quite wide space drilling. There's a couple of 100 meters either side that we still need that we can infill in between. And what we'll be doing is sending in an air core rig and drilling all around this and really trying to get an orientation for which to do a diamond drill hole. So this is a very exciting prospect for us, and we can't wait to get in there and start drilling. You will note there is a diamond hole that you can see here. We drilled that before we got the result for hole 1030. We had a diamond rig available, and we really wanted to just take a look at the rocks. So we drilled this just to see what it looked like, make sure it was a diorite, make sure it was a good target. But in hindsight, looking at that result from 1030, it's really opened up this eastern contact here. So when we go back, we'll really be focusing on that and seeing what we can uncover. So we'll be drilling there shortly as soon as we can get a rig onto the ground. Moving on to Carry, this is an interesting one. It's the one we've done the most work on. It's a 4 kilometre long footprint that we discovered with an air core rig. So it's a 4 kilometre long air core anomaly. It's a great target for us. It's a very large footprint, and this is what you're looking for when you're trying to find a big ore body. Last year we got some great diamond drill results, including 5 meters at 14 grams, and that included 2 meters, 2.2 at 32, which is a very nice number. We did a few more diamond holes this year. We did eight diamond holes. We got some very interesting results, strengthening of the alteration and mineralization around that high grade hit. We've got a bit more work to do. We will send in the air core rigs at some point in the next field season, which starts in December. So it's going to be starting shortly. And we'll really be looking there to see if we can better orientate the diamond holes to see what's there, because this is the sort of footprint you need if you're looking for a Fosterville size. I mean, a Fosterville footprint will be a 4 kilometre long anomaly like this. So this is what we're looking for to find that big target. So it's a very interesting prospect for us. Now, what this has also given us is a big data set, because we discovered this from scratch. So we've now got the pathway from first pass exploration all the way through to diamond hits of 5 meters at 14 grams. So what we did is we've used this to benchmark all the new prospects we have at Pyramid Hill. So we stripped out all the drilling other than the very first pass, and we compared that to everything else we've done drilled in the portfolio. And it really generated a pretty interesting target, which I referred to at the start of the Pyramid Hill talk. So that top section here, that's what Pyramid Carry looked like when we did our first pass drilling. So we did 20 holes in January 2019, and you can see there we had 3 holes greater than 25 ppb and 1 greater than 100. So it's not spectacular, but this led us to do infill drilling around that central Carry trend area, and that's where we got the 5 meters at 14, etc. So the process worked. Now, we compared that with everything else we'd done first pass drilling on, and the one that really stood out was that one that's right next to Bendigo, the Wandoo target. So back in last year, in January, we drilled 24 holes, 15 came back with anomalous results greater than 25 ppb and 8 greater than 100. And just looking at that, you can see that it's an order of magnitude probably better than Carry at the same point. So not to talk down Carry, but to me, Wandoo looks like a much better target, and we can't wait to drill Wandoo in the coming months. So just summarising Pyramid Hill, we've got a busy work plan. It's starting next month. It has been quite wet in Bendigo, as many of you know, so we're a little bit behind there, but we've got the rigs ready to go. We've got the staff ready to go. As soon as we can get on the ground, we will. We'll do infill drilling at Ironbark, Carry, Wandoo, and a prospect called Banksia. But then we'll do quite a lot of regional exploration as well. So this map, we've tried to colour code it to make it simple. So all those yellow areas, that's where the cover is less than 20 meters. So we can do soil sampling, and we have done some soil sampling and announced some results. And everywhere where the cover is between 20 and 120 meters of cover, we'll be doing air core. So all those orange areas here is where we'll be doing several kilometre spaced lines of regional air core to generate the next lot of targets that we'll do infill drilling on. So this is a very significant area right along a major fault, and it's never been properly explored, which I find quite extraordinary. It's so close to Bendigo, so close to a major structure, and it hasn't been properly and systematically drilled. So these are only granted this year. So this was never drilled. This hasn't been drilled by us before. So this is a new targets for us. So we're quite excited. So not only do we have the infill drilling, but we've also got that regional work. So we're going to be very busy, and there'll be plenty of news flow well into 2023. So just moving on to WA. This is the one we announced results for on Monday. This is the Viking project. So it's in Norseman. It's in the Albany-Fraser part side of Norseman. So very interesting stratigraphy that hosts Tropicana and Nova Bollinger, the several world-class ore bodies in the Albany-Fraser. Viking is an ex-Anglo Gold prospect. They discovered it in 2011 after they discovered Tropicana. They defined some small oxide zones, got some good hits, and for reasons we don't know, they walked away from it, gave it to a junior. They ended up running out of money, so it ended up getting picked up by a company called Metal Hawk, and we did a joint venture with them, and away we've gone. So we've just done our first drilling program. We got some pretty nice results. We drilled 10 RC holes. 5 of those holes returned visible gold in the RC chips, and we drilled them at the Beaker 1 and the Beaker 2 prospects. We got the better results from Beaker 2. So we drilled 5 holes, and you can see the results there. 6 meters at 5.1, including one at 28.5, 3 meters at 6.07, including one at 13. So very nice high grades there. We got lots of visible gold. So very interesting. And this was a proof of concept drilling program. We just wanted to show that the gold went into the primary rock, and it wasn't just a little oxide zone. So we ticked that box. And now that we got these really good results, we're going to be going back and doing follow-up diamond drilling, and we're starting next week. We only announced the results on Monday. We're going straight back, and we're doing diamond drilling there from next week. It'll be quite targeted. It'll be step-out drilling. We'll go 100 meters down plunge, down dip, 100 meters along strike, and 100 meters along strike to the south as well. And we're just looking to see how big this is, and is this high-grade continuous? And that's what it looks like in cross-section. So you can see there's the oxide zone that Anglo Gold defined. You'll see how shallow that drilling is, and they didn't chase it down into the fresh rock like we did. So we just simply drilled one hole here, just underneath these very high grades, 5 meters at 44, 4 meters at 15, very high grades. And we got 2 zones, and including this good zone that I already told you the results for. And interestingly, this structure, they didn't hit it with their shallow drilling. So this one's quite exciting. So we're going to be looking down plunge and down dip here and along strike to see how continuous this high grade zone is. And this is only 30 kilometers from Norseman, so it's very proximal to an existing operating gold mine. And just quickly, so there's Beaker 2 here, there's Beaker 1, that's where we did our drilling. And what we've also uncovered is there looks like there's a shear zone that's quite prospective to the northeast. So we'll be looking at seeing that goes under a little bit of cover. This hasn't been explored by Anglo Gold. They only did very shallow drilling. So this is quite prospective as well. So there'll be a bigger picture here too. And just finally on Mount Jackson, this is a bit of a sleeper. This is just a 5 kilometre long greenstone belt that's never been explored. We've done some soil that's got gold on it. We'll go in and do some infill soil and do some air core and really see what's there. But it could be gold, it could be base metal, it could be batteries. It's a new field and it's never been explored before. So this is quite exciting. So that's Falcon, a great team. Several company making discoveries in the team. Massive ground holding in Bendigo, 5,000 square kilometres. High grade results at both Pyramid Hill and Viking, and we're drilling in December at both projects. So and we've got the cash balance of 24 million to do it justice. So thanks very much.
E79 Gold Mines is led by Ned Summerhayes, an exploration geologist with over 15 years experience exploring in both Australia and overseas. E79 Gold Mines is actively exploring on its 2 large projects in highly endowed greenstone belts within Western Australia. Please welcome Ned Summerhayes.
Thank you, everyone, and thank you to RIU for putting on this event. I'll be talking about E79 Gold Mines. Here's our standard disclaimer. So we are a West Australian-focused junior explorer. We have a strong technical management team with a history of discovery and development of sizable projects in prolific greenstone belts within Western Australia. We have a very active strategy of putting our money in the ground. To date, 75% of all our expenditure has gone into the ground in aid of a discovery. So I'll just show you our corporate slide. You can see on the left, the board led by Chris Cairns, Deborah Lord and Peter Ironside. On the right, you can see our corporate information. I'll probably just highlight our cash position sitting at above $6 million. We have quite an active exploration program and we have the cash to keep on with these programs. We have 2 projects in Western Australia. We We have 355 square kilometres at the Laverton South project. This covers a southern extension of the Laverton tectonic zone. This is a 250 kilometre long, deep, very prolific zone, has over 30 million ounces of gold. Similarly, in the Murchison goldfields, they are endowed with over 30 million ounces of gold, and we have just over 500,000 square kilometres. Focusing in on the Laverton South project, you can see on the map on the right, shaded in grey, the Laverton tectonic zone. The table on the left is the large deposits that make up this zone, and that's really highlighted by the world-class Wallaby, Granny Smith and Sunrise Dam deposits. It's a little bit hard to see on this map, but they are all clustered just south of the town of Laverton. So while the central and northern part of the Laverton tectonic zone have been well explored, the southern area is quite underexplored, and this is where E79's projects are. While we say that the southern area has been underexplored, it has had some wonderful exploration success in the last 10 years. The Lake Row Gold project by Breaker is now over 1.5 million ounces, and the Rebecca Gold project, owned by Ramelius, is over 1 million ounce. So these have been new discoveries in the last 10 years, and they're within 20 kilometres of E79's ground. Within the Laverton South project, we have two exploration areas, Pingeon and Lake Yindana. Combined, these two projects mean we have the north and south, we're exposed to the north and south extensions of the Rebecca discovery, and we own the north and south extensions of the Anglo-Saxon open pit in the historic Pingeon goldfields. When we got this project together, what we really liked about the Pingeon area is it's had multiple phases of historic exploration. This allowed the previous explorers to undertake a detailed review of their work and the historic work, and they've come up with 4 walk-up drill targets, which for a new company was an excellent result. With these 4 targets, we've focused on target 3 and target 4, but it's worth noting, and you can see on the map in the south, that target 1 and target 3 form a 15-kilometre long stratigraphic zone of anomalous gold. Within this stratigraphy, but off our tenements, drilling in 2011 hit 33 metres at 3.1 grams per tonne at Cogella's Gift. So we know that these rocks are capable of hosting thick gold mineralisation that's shallow. Target 3 is where the company has spent most of its time to date. We've drilled over 250 air core holes, and we've delineated a 2.6 kilometre long zone of anomalous gold. Gold is found both at the bottom of and, importantly, below the regional paleo channel. Being below the paleo channel is important because it means that the gold is in situ and it has depth potential. The drilling there has outlined 3 distinct target areas: the southern zone, the central zone, and the western zone. The southern zone is a new area. We announced this just yesterday, and it's defined by two holes with greater than 3 grams per tonne. This is really important for the company as we're moving from gold anomalism into gold mineralisation. These zones of gold sit below the regional paleo channel, and they sit in the same stratigraphic position within a basalt to the east of an ultramafic unit. To the south, we have a 3rd line of drilling that tests this stratigraphic position, but the assays have not come back yet. The gold itself is associated with quartz veining, and the line to the north, which ends in 1 metre at 3.88 grams per tonne, the gold extends to the end of hole position. We have gold pathfinder elements as well, with tin, tungsten, copper and lead. We have an RC program imminently coming. The rig is due in the next couple of days, and this will test underneath. One of the limitations of air core is it can only drill until the ground gets hard. So we've brought in an RC rig to test underneath these zones of gold mineralisation, and that will be coming on site in the next few days and hopefully finished by Christmas. The central zone is a 600 metre long and 120 metre wide zone with thick anomalism to the end of hole. It also has gold pathfinder elements, including arsenic and copper, lead and zinc. So this area apart from the gold, there's a few other geological features that are supporting this target, which is one of the reasons why we like it. The gold itself is sitting in a demagnetized zone. This is similar to large deposits in the region. Essentially, the gold-bearing fluid that's coming in destroys the magnetite in the existing rock. So we're starting to understand why the gold is there. The alteration that we're seeing in the end of hole work, both in the logging and in the hyperspectral work, is just showing minerals that are consistent with being in a large fluid flow environment. So we're seeing that the gold is deposited between a oxidizing and a reducing fluid where these are mixing, and this is also similar to large deposits in the region. The gold sits within the greenstone granite contact, and we'll also undergo deeper RC drilling in the upcoming program. The western zone is parallel to the central zone. It's a little bit higher grade and a little bit narrower. This sits wholly within the greenstone and on the western side of a magnetic high. Again, we'll put some holes under this and understand more about the system. Elsewhere, we've drilled about 95 holes. We're awaiting the assays, and this was testing at target 4. This was a 2.5 kilometre long zone of anomalous gold in drilling. That gold sits on a magnetic high, which runs to the south through the historic Pingeon goldfields. There's over 8 kilometres of workings to the south, including 2 modern open pits. That same unit then runs to the north and hits the high-grade Patricia open pits. This area the drilling was designed to understand more about this project and to extend that anomalism through areas of demagnetised zones as well. So again, that drilling's been completed and we're awaiting those assays. Elsewhere in the Laverton South project, we have the Lake Hindana exploration area. This is a fantastic exploration opportunity for the company. The area was historically mapped as a less prospective granite, and it was largely ignored by historic exploration companies. To date, there's only 65 RAB holes within the tenement, which is over 215 square kilometres. Half of those holes weren't assayed for gold or gold pathfinder elements. The company was really drawn to this ground because we could see some lineations in the regional magnetics. This gave us an indication that perhaps it wasn't all granite in the area. We had a review of the historic drilling and we saw that they had intersected greenstone lithologies. So we knew that there were greenstones there. So the next stage was the company undertook a ground gravity survey and we unearthed about 25 kilometres of untested greenstone. As well as the greenstone, the gravity also showed a number of circular features which are interpreted by us to be intrusions into the greenstone, which have added additional drilling targets. So these, we've planned the drilling, we're awaiting a heritage survey, and then we'll put the air core rig straight in here as soon as possible. By unearthing this greenstone belt, we've essentially created a new search sphere. So we've got 25 kilometres of untested greenstone in the highly prolific Laverton tectonic zone. One of the good things about being early in a new search sphere is that history shows that the biggest deposits are usually found early in this stage because they show the largest signatures. Our second project is in the Murchison region, is in the Jungar Flats project. This is within the Murchison goldfields, another 30 million ounce endowed area. We have about 90 kilometres of strike of the Big Bell Shear and associated structures within our tenement package, which is over 500 square kilometres. The Big Bell Shear comes off the Big Bell deposit and is the largest gold mine in the region. The area is prospective for gold, base metals, platinum group elements and iron ore. While our name is E79 Gold Mines, we will explore for everything and we will find whatever we can on the ground. The Jungar Flats project, the target for the gold that we're looking for is the greenstone that runs through and is associated with the Big Bell Shear. What we've done is we've undertaken a ground gravity survey to really constrain where this greenstone is. A few companies, BHP and Newcrest, spent some time here and they drilled within this greenstone and they unearthed some gold anomalism, which they never followed up. One of the issues of exploring in this area is the well-developed hardpan, which obscures the underlying geology. So we trialled a technique developed by the CSIRO called ultrafine soils, which has the ability to identify geochemical anomalism potentially associated with mineralisation under this cover. So the company is currently undertaking a 3,000 sample program to test this greenstone, about 15 kilometres of strike, that we know in parts has gold anomalism from the previous drilling. So that's a brief overview of the company and what we've been doing. We've been doing a lot of work. We have a lot of news flow coming up. We have an RC rig coming in the coming days. We're awaiting some air core results. We've got the auger program happening, and we've got plenty of exploration coming up. The company is well funded to continue our active exploration, and we look forward to updating the market. If you have any further questions, please come and see us at the booth.
Adavale is a junior explorer with focus on the exploration of nickel, sulfide, and uranium. The company's Kabanga, Jirani, and Lahuma nickel portfolio is within the East African nickel belt of Tanzania. It lies alongside the massive 59 million tonne, 2.62% Kabang nickel opportunity, in which BHP has taken a $100 million strategic stake, and their uranium project, which is in Australia's most prospective region for uranium in South Australia. Adavale is currently undertaking a critical 8,000-metre drilling program, now underway, on prospective conductors identified at the Kabanga Jirani nickel project in Tanzania. David Riekie is Executive Director. He joins us now with the Adavale story. Please make him welcome.
Thank you, Jerry, and thanks for being a great chairman throughout this conference. Special thanks to Jackson and Charm for putting on this conference. Thanks for all those that are attending. It's the latter part of the day and second day in the conference, but glad to see so many faces in the auditorium. And special thanks to those that are joining us online. The actual title demonstrates what our objective is. We are looking to uncover a Tier 1 nickel sulfide discovery in this East African nickel belt, on which we actually have a dominant position. If you need to find monsters and you need to find the elephants, you need to go to where they've already shown and demonstrated that prospectivity, and we're sitting right alongside one in Kabanga. We're blessed in the sense that we both have an exposure to nickel, which most of our dollars have been spent on at this point in time, but we also have a very interesting portfolio in uranium in South Australia. As mentioned, we consider that we've got the dominant position within this East African nickel belt. And I think this area is going to become an area of greater levels of interest because it's actually positioned and poised to be a hub for nickel processing as well in this region. And that's a consequence of BHP coming into this Kabanga nickel and putting its money where its mouth is. And I think that with every exploration program and exploration company, there's a process that you'd like to be able to demonstrate, which you can replicate and actually show continuing success and improvement as you go through. So we've taken some time to establish what we consider is to be a good dedicated methodology, which is now starting to show some real outcomes. And that started with a gravity program over the area, approximately 1,000 square kilometres, conducted over the front part of this year, which has actually enabled us to delineate some of those areas which we've decided to do some heli-EM. The program that has been mentioned and titled on the slide here is that we're undertaking an 8,000-metre program. Predominantly, it's going to be a blend of both RC and diamond, but with the view that the RC will be through the weathered profile that we're encountering, and the diamond is actually going to unlock the real value with the core that's going to be coming from it. The objective is to target areas up to about 300 metres, but we've already made that obsolete in the sense that some of our holes we actually anticipate drilling a bit further because we've got that level of correlation with some of the conductors that are now being uncovered. I think in my view, of having had that African experience, the team that you assemble will actually dictate the beachhead that you've created in a country. And in any African country, you need that strength and support to actually enable those sort of key events to happen and for things to keep moving forward. We've handpicked our team. We're blessed with that. We've got a general manager that has actually been identified by our chairman, Grant Pearce, and he demonstrates those levels of connectivity and ability to problem solve in Africa. We've just recently completed a $3 million raising, so we consider ourselves well funded for the current programs that we've got here. And by way of this slide here, we can also demonstrate the fact that we have a number of options that are outstanding and hopefully will be in the money very shortly. They're sitting around about 3 cents, as is our share price. So that will entitle us to approximately $3 million over a 11-month period. So we see that as an opportunity to continue to fund the exploration that is ahead of us. As I mentioned, our chairman, Grant Pearce, he's had that African experience, specifically in Tanzania, with his time with Resolute. And he has an outstanding affinity with Tanzania generally and the people. Order of Australia demonstrates the merit of the human and his humanity, and that's been well received by people that we're working with in country. My background is in uranium and nickel, and a function of roles that include non-exec director and CEO and chairman roles. John Hicks can lay claim to actually being an explorer of real merit and standing in the nickel space. He's discovered Savannah North and other areas at his time at Panoramic. So we'd like to have that level of experience in our team, which also extends to our Chief Executive Officer and our CFO and Company Sec, Leonard Math, who's also had African experience. I keep referencing Africa and its experience. It needs to be an important feature of your dynamic and your profile to have that measure of success that we're all chasing. 500 million shares on issue, roughly $15 million in market cap, sees us also with a number of options, like I said, outstanding, and a representative ownership by way of board and management of 6%, which we think will increase because we have performance rights that will be dictated by discovering resources. Our objective is to find opportunities that will be delineated in a resource of merit to JORC standard. I won't dwell on this, but we are a bit of an outlier in this conference. There aren't too many people that can lay claim to the fact they're outside of Australia and they are in the nickel space. And we also have this exposure to uranium. The nickel sulfide deposits are a rare beast. They are rare and in demand. And it looks as though that we're driving towards a situation where you'll focus on those areas that have demonstrated prospectivity. We are blessed in Western Australia. We also have that feature in Canada. And we also see that Tanzania demonstrates the same level of opportunity. It's earlier in the piece, but interestingly, there's been a lot of exploration over a period of time that has actually been stalled by a number of factors outside those owners over a period of time. I won't labour the fact that this thematic is a very powerful one. It's been demonstrated with the people that were the keynote speakers during the course of this conference. Nickel is in demand and it will stay in demand, and that demand will increase as we electrify, and we are looking at introducing nickel into EV. EVs require nickel for their functionality. That will not change with anything that's being put out there at the moment. This will be around for decades before other technologies may actually challenge it. But the feature of nickel is it's very, very highly regarded in its properties and its features in actually entitling the best out of any EVs. We're at an ebb with regards to stock, and we see that most of those opportunities to deliver this product into market are in Russia and China. They are not the flavour of the month. We see that people will start to look elsewhere to provide that mainstay of source of supply and deliver into it. What's been also a feature of the space is that there has been a number of corporate opportunities. Some have been successful. Specifically, Mr. Forrest seemed to scoop up Noront. Unfortunately, BHP missed out. That has been to our betterment and our fortune, because BHP looked further afield at Kabanga Nickel and has taken a strategic stake. I think there will be a consolidation, that's my personal view, on this space, because these sorts of opportunities, high-grade scale, generational opportunities, are not everywhere. So you're going to have to go to where those big opportunities sit. Tanzania as a destination has improved significantly over the recent past. It's a feature of the fact that BHP discovered this deposit and has now chosen to come back into Tanzania, put $100 million into a company and move towards production. That's a fantastic endorsement for the region, the country, the opportunity, and our significant portfolio and holding within this East African nickel belt. With respect to Kabanga Nickel, they don't own the belt. The belt sits from basically Uganda, Tanzania, down to Burundi. So we have a dominant position in this belt, and we think we need to go where the elephants are found. So we've actually taken the view that the areas around that are most prospective with our gravity and our EM is a feature of why we ring-barked those areas. They were available, we pegged them, we are now unlocking the value. Similarly, I think the feature that my technical guys always want me to reference in this slide is that the age of this particular deposit, right? It's a feature that has happened in other places around the world, high grade, large, this sort of age rock. Kabanga, to put it into context, it's circa 60 million tonnes, it's 2.5% plus credits. It's a monster. It is the largest undeveloped nickel opportunity in the world, and we're alongside it. And we think that actually is going to demonstrate some great prospectivity with the drilling that we're now doing to unlock the value, to give us the catalyst that's going to move us and project us forward. I will not labour on this slide. Have a look at the presentation. Please come back to me if you've got any questions. And at the booth, we have some presentations available for people to take away if they so wish. And if they're old school like me and they like the paper versions of a lot of these things. We got the grant in 2020. We've moved forward. We stepped out. We did the gravity. We've moved to heli. We've identified those areas. We're chasing a resource at the end of next year. Why? Because we're all motivated, because we've all got performance shares driven around that. We are here to drill and unlock value. I won't labour this. You've got a sequence of events that need to happen to unlock and demonstrate prospectivity in an area. It needs to be methodical, it needs to be diligent, it needs to be prioritising, and you spend the dollars as wisely as you can. So we've gone through those processes to rank the highest prospectivities in our mind, and now we're undertaking the drilling. A little bit of technical stuff. I won't labour this. We didn't have a number of sources of relevant information that gives us a good understanding as what Kabanga looked like. That information is not public. It's Africa. It doesn't actually lend itself to making those details available. However, we've got some clever people that have gone back and said, what would Kabanga look like if they just ran some gravity over it? So we've used that same re-engineering, back engineering to understand what the actual megagale reference would have shown if they'd run gravity over it. So we've used that as a template. Now, in addition to that, if you overlay what you need to do, which is not only the gravity, but the EM, you've got another coincident and correlation happening at the same time. We've already done soils. Because we have a weathered profile, you don't get that same level of definition and delineation as to where you should be drilling. So we've taken the time to go from 1,000 square kilometres to 200, down to about 50 or 60, and that will be refined further. These deposits, they sound quite big, but their footprint is not massive. Mining is a number of these little pockets in our ground holding that could demonstrate that level of scale of opportunity. Circa 500 metres, it goes down about 1 kilometre, 30 metres by way of mineable widths. So they're not massive, but they're sitting between 10 to 40 million tonnes with the right SG and the right grade. Again, grade is super important. The drilling campaign underway started in October. We've actually drilled 2 holes. We've collared with RC and moving to the 3rd hole. We've actually gone to great lengths to engage the local community in our exploration activities. So our local RC rig, you can see there, is operating well, and it's actually providing a cheaper alternative to go through the weathered zone so we can actually move into the diamond drilling. You're going to see more of these slides in the upcoming announcements going out to market. And what we're trying to do is to actually provide people that level of why we're doing what we're doing, coincident, gravity, EM, drilling, understanding what sits beneath, which are these are conductors. Now, they won't all be rich. We're finding that if we can delineate them and actually get the holes cased, and we can actually put down downhole EM probes, we'll have a greater level of understanding as to what lies below. It's a learning experience that we're going to actually develop over our program. I've highlighted here a couple of those areas that we think are most prospective. We actually started at HEM2. The slide up there, HEM4 is actually where we're going to move to next. We've collared that hole. We're going to be drilling that very shortly. We're moving over to HEM7 and HEM9 and 8 on the western side of our tenement holdings. We're currently on the eastern side, and we'll start that decision and that prioritisation over the coming months. just to put everyone in the context, we're drilling about 50 metres to 70 metres a day. We're looking to basically get as much of that level of continuity of activity so we can actually move through this drilling program. So it's going to go into February. The actual community focus, you need to operate with a social licence in Africa. It's pretty obvious. So we've taken great pains to choose those community-focused opportunities that are going to put benefit into the community there. We've actually chosen to use Bridge to Aid and Varka Health Foundation, which is effectively a health-focused opportunity. I've got a couple of minutes left to speak about the uranium. Unfortunately, it's the second slide, so we've focused most of our money and efforts in the nickel, but we should not discount the value and opportunity that sits within what has been a legacy asset, and it's a foundation asset of the company. We've got a significant ground holding here. We've actually moved from about 400 square kilometres to 1,000 square kilometres. We've actually started to do something a little bit quirky. We've used helium signatures to actually delineate where we might have some opportunity. We've then overlaid some some gamma surveys to give us that level of focus in and around those areas of greatest prospectivity. We've taken some rock chips and then we're moving to a very shallow air core program, cheap, shallow, and it's giving us the ability to move towards, hopefully, a resource if the emplacement of the uranium is going to be in the right style and the right grade. So these are the features that really you want to see in these sorts of opportunities. It'll take 3 weeks. Unfortunately, like most of Australia, it's drowning. There's been so many of these unseasonal rain events. It means that we can't get our rigs on there. So unfortunately, we've had to move that to January. But I'm just saying now, it is underway. We've got everything lined up, ready to go. The investment thesis is very, very simple. We've got a very strong foothold in the East African nickel belt in the nickel. We think we're in the area where elephants will be found, and we've got a ground holding that demonstrates an opportunity to deliver into that. Exposure to nickel and uranium, the right team in the right place, with an environment in Tanzania moving towards a much more welcoming opportunity for people when they discover to unlock value. Appreciate your attendance here today, and if you'd like to pick up a presentation, please see me at the booth. Thanks very much.
Thank you, David. Sean Sivasamy is a mining professional with more than 25 years of global experience. He's the founder, director, and CEO of MetalsGrove Mining Ltd. His professional contribution includes mineral discovery and improving the efficiency of mining operations. He holds a master's degree in geology, and he joins us now. Please welcome Sean Sivasamy.
Thank you, Chair. Thank you, RIU, for the wonderful conference. The MetalsGrove, we assembled this project last year and listed July this year, about 5 months here, old baby us. We have a two high quality projects in Western Australia and three advanced exploration project in Northern Territory. The standard disclaimer. This is a company update. MGA is listed, I said, July, and we are focusing on essential critical minerals, clean energy future. The maiden drilling program just started a couple of days ago at Upper Kundina Lithium Project. We have advanced the portfolio: lithium, rare earths, copper, gold, and manganese-based metal. We have a number of share issued, 52 million shares. Our market cap is about 8.79 million. We have cash of 5.57. The top 5 shareholders holds 52% of the shareholdings, and the rest of them is 47%. This is our corporate and ESG. We have a strong, experienced management team. Chairman Richard Beasley, who is a mining engineer, more than 35 years of experience. he worked from scratch to production, into the production. He currently is a managing director for Troy Resources, and he is hold for a non-executive chairman for a number of other junior exploration companies. Myself, I'm a geologist, over 25 years experience, worked in different commodities. I assembled this project, as I said before, last year and listed this year. Haidangchi is another director. He is a mining professional. He is operating a couple of mines, iron ore mines in Western Australia, in Kimberley and Midwest, last 10 years successfully, and he has well connection to the Chinese investor market. Our social, we connect a community and value to the communities as well. Environmental, like we have smaller environmental footprints, like using new technology. Economic, we are transparent, thanks contribution, employment, share for your returns. Governance, high level of rigor in business, ethics, and governance. So highlight of our projects. We have two high quality projects in Western Australia, lithium and manganese. The lithium project is X Greenbush project. Manganese project is X Consmin. The Advanced Exploration Project, Northern Territory, Bruce, Edwards Creek, and Box Hole. Our high priority projects are lithium projects and rare earth project. So lithium, it's been mined as a tin mine in the past, 1960s. No serious exploration for lithium. And recently, we picked this ground, we're focusing on lithium, and we have a systematic approach of exploration activities so far. And we have finished soil sampling, geophysics, air mag and radiometric survey, and detailed field mapping. And put together all this data, and we come up with a narrow down the drilling target. Just we commenced drilling a couple of days ago. We just finished 6 holes, so another 50 holes to be drilled. Rare earth, we just as I said before, we had a systematic exploration. We finished mapping, air mag survey, radiometric survey. I'm just waiting for heritage surveys to be done. Once the heritage is done, then we can start drilling on that project following the lithium project. Copper, gold, and base metals. It's been historically drilled by a number of companies and explored by a number of companies. So Edwards Creek in 1960, CRA drilled a couple of diamond holes. It's in the sector 4.5 meters, 2.5% copper. Then another hole is 18 meters of mineralization. The manganese project, which is Consmin project, ex-Consmin's project. We have done some soil samples and geophysical survey as well. Just waiting for heritage survey to be finished. Hopefully we'll start drilling next year, first quarter. We got up the historical samples. We got up to 52% manganese. It looks very promising. The Western Australian projects, a lithium project. Here there is Upper Kundina, that is manganese project. You can see that's the Pilbara granite, the upper contact and the lower contact. In the upper contact, you can see that Wagina, Mineral Resources, Pilbara, this is Altura, and Global Lithium. The lower granite contact, there's a lot of activities happening at the moment. So we are one of them. We put together all this data and we just keep the drilling. The manganese as well, there is, we have finished all this work, just waiting for the heritage survey to be done, then we'll start the drilling. The Upper Kundina lithium tin tantalum project, just like overlay, the correlate with the mag survey, air mag survey with the thorium and potassium ratio analysis. You can see that's the above 500 ppm anomalies, just that's the corridor. There's the corridor. It's well correlate with the anomaly. And you can see that's the tantalum. Tantalum, we got up to 100 ppm on soil, which is really good. Where the number of other companies in the Pilbara, their resource, if you look at their table, they're about 50 ppm in the resource. The 100 ppm soil is fantastic grade. Then we did some heat mapping based on the lithium, just on correlate with the tantalum. This is the number of heat areas, priority areas. We just started this drilling this target, then we're just following this area. Arenta, there is a Northern Territory project. We have copper, gold, rare earth, and base metal project. Our high priority project in Northern Territory is Bruce, which is rare earth and copper gold. And this is Edwards Creek. There's a couple of diamond holes. I'll go through that detail later on. And the box hole, that is ex-BHP projects. There's about 12,000 meters we drilled in the past. Just we're going to do this infill drilling and follow-up drilling. This is the field mapping outcrops. There's the pegmatite outcrops. Then there are historical mines, 3 historical mines. That is the gold copper prospect. You can see that the MAG survey, it highlights number of targets. It's well correlated with the recent rock chip samples. We got up to 450 ppm total area oxide and 350 ppm heavy rare earth oxide and another 250 ppm magnetic rare earth oxide. That gives us a very confident that that has a potential that follow-up drilling is required. That's what we're planning, drilling after completion of the lithium project. This is the gold project up north. We got the surface rock chip sampling and the soil samples. We got up to 53 grams per ton gold and 3% copper and 16% silver. There's a unique assay results which so far we got. And again, here you can see that the 2 different geology. There's a major structure running through. And then you can see that's the historical mines which was mined in 1960s World War II. This is another exciting project for us. This is total outcrop, the drilling, the historical drilling and the sampling. It extends about 7 kilometers. You can see this number of grades. It's about 13 meters, 2.5% zinc, which is from the surface. There's a big elephant deposit. Just we need to find out that the major mother lode of the zinc deposit. We have got all this mining approval like PO, mine management plan and access agreement. We're just waiting for the heritage service to be done. Once the heritage survey is completed, we'll just do the follow-up drilling next year. This is our copper gold project, which is drilled by CRA. 2 diamond holes, 2 RC holes, 1960s. It's about 4.5 meters and 2.2% copper, then another 18-meter mineralization. Between these 2 holes, it's about 250 meters. What we're planning is just doing some infill drilling and test the down dip extension of the mineralization. And recent site visit, field mapping, that is the discovery of a new copper occurrences. There's one of the sample, it is a 0.81%. It's about nearly a percentage copper from the rock chip sample. We're back to WA project, that's manganese project. So you can see that the recent air mag and radiometric survey. So you can see that's the gray dots, the black dots, where the consolidated minerals, they got a 20 million tons sitting there, a joke resource. And we have a number of outcrops, about 12 drilling targets identified already based on the recent field mapping and air mag survey. These are quite good targets. It's all outcrops, you can see them all. And with the current trending of lithium, the increase of copper and manganese and lithium, and it's increasing like from 2022 over here, and in 2030, and in 8 years' time, it's threefold and sixfold increase. You can see another graph as well. Just you can see that where we are and what is the demands for the critical minerals. Near term, this is the value for the shareholders. We just kicked 3,000 meters RC drilling program, just finished 6 holes. And then we try to finish the drilling program just before the Christmas. Then we'll continue the follow-up drilling. The first phase of assay result we are expecting January, end of January, first week of February. Bruce project, which is the drilling will continue after the Upper Continental Lithium project. The maiden drilling program, Woody North, expected to commence early 2023 to test the broader contactor. MetalsGrove advancing multiple high-quality metal projects with a strong pipeline result to be delivered over the next 6 to 8 months. Check these contact details. Yep. That's it. Thank you, everyone.
Thank you, Sean. Advance Minerals Executive Director Keith Middleton is an experienced company director and corporate advisor of ASX-listed companies specializing in the Australian and international resources sector. He has extensive experience in financial analysis, risk management, major capital works expenditure, corporate governance, and ESG regulations. He's the former managing director of American Rare Earths, where he had direct accountability for mining operations and exploration activities, coupled with strategy formulation, project evaluation, and investor relations. Please make him welcome, Keith Middleton.
Well, thank you very much. It's the second to last slot, so I think everyone that's still here has done a great job. It's a bit like speed dating. So I'll take you through our organisation in about 15 minutes and really try and get across the message to that we are a US-focused, US-based strategic metals explorer. The presentation I'm giving today has been released to the ASX, and all the details sit within the ASX platform. Very simply, there's really a few things I'd like to share with you. That is that we are focused on the US, particularly in the Western Rockies district. We're building a pipeline of strategic metal assets, and we have a lot of experience in that sector. We have a very tight capital structure, and we have a lot of experience on the board in delivering projects that create shareholder value. We have a tight shareholder structure, and we have a very modest market capitalisation. Myself and Jeffrey Hill are the Australian-based directors. The remainder of the team is North American-based. And I think if you want to get something done in the North American precinct, you really do need people on the ground. Geoff Hill's a corporate participant over many, many years and has built and chaired a number of very successful ASX-listed companies. The rest of our team, as I've said, are North American-based with a deep understanding of strategic metals, rare earth elements, and have brought a number of projects through to production. Why are we in the US? Look, I think the thematic's been repeated by many people, but it's just worth continuing to repeat the fact that it's a very favourable jurisdiction. There's a very clear permitting path that is understood by all parties. There's fantastic resources available in the US for junior exploration and mining activities, and there's a massive transition that's taking place that's giving all companies, particularly in the resource sector, enormous government support. Why is this occurring? Well, very simply, we think that the energy transition that is taking place in the US is sparking America's next mining boom. And they have a history of producing mines. Obviously, Australians are very good at the junior exploration stage, but the US has a number of highly productive mining precincts and districts. And we've identified two projects in Idaho that have historical copper and historical gold mining activities. Why do we think copper is important? Well, it's been said by everybody, so I'll say it slightly differently, that copper is very much part of what is the infrastructure play that becomes the electrification of the US electrical supply. I think we all know that the green technologies, the wind, the power, the solar power is effectively a decentralized electricity network. And in order for that network to work, you need an enormous amount of infrastructure, and that infrastructure needs copper. And I think we've all seen the statistics about the demand for copper going forward. And as such, we're in that space. As a company, we are a junior exploration company. We have a market capitalisation of less than $6 million, but we have a very clear investment approach as to how we do things. We are targeting areas with proven production. We have very specific location criteria, and we have a very specific asset criteria. And essentially, as a junior, you need to go into proven mining districts where there is often historical data that has either been overlooked, and see if you can update it and see if you can add value to that database. And you can see there are a number of the US states that we've been active in as we both manage our existing assets and look for a potential third project. We're currently in Idaho very simply because it's a mineral-rich state. It has very good infrastructure in play. It has a number of mined commodities, has a number of historical assets that continue to produce, and we believe it's what we would describe as a mining-friendly jurisdiction with known permitting pathways and a known understanding as to how to bring through assets into the market. We're currently in a region called the Seven Devils region. It has over 100-year history of copper extraction going back into the late 1800s. Miners such as Anaconda and many others have been there. And as you can see, there are a number of ground disturbing activities that have taken place with various mining activities. And if you have a look at the chart on the right-hand side, you'll see that quite often the mining for copper activity increases proportionately every time there's an uplift in the copper price that's sustainable. And so far, we think we're in the fourth big lift in the copper price, which means that these types of historical mining jurisdictions get another lease of life. And we're certainly there to take advantage of that. Our Garnet Creek Copper Project is a highly prospective area north of Cuprum in Western Idaho. We have 147 federal lode mine claims. We cover 2,500 acres. And on Monday of this week, we released a JORC exploration target that says somewhere between 2.7 and 6.4 million tonnes of copper at grades ranging from 0.5 to 1.5%. And I think what's important there is that mineralisation and that JORC exploration target was at a cut-off at about 100 metres. And we have applications in place at the moment to drill beyond that 100 metre and see if we can extend and see if the mineralisation extends beyond that exploration target. The land is managed by the Bureau of Land Management and the US Forestry Services. There's good power in place. There's pretty reasonable road access, and they all form part of the investment criteria that we look for when we put a foothold on various mining and leases that exist. Our JORC exploration target, I think, is just a snippet of where we think we might be. As I said before, the cutoff target was around 100 metres. We're going to drill beyond 150 and, if possible, into 200 metres. We've undertaken appropriate visitations on site. The surveys have been completed, and we've submitted our drill applications. And if successful, we think we'll demonstrate that there's mineralisation at depth. But again, it's a junior exploration company in an historical mining district, and it's very interesting to see whether or not those drill targets can demonstrate that the mineralisation extends beyond what is initially known about the area. I think what the next couple of slides are designed to do is demonstrate competency and capacity to get things done. I mean, everyone can talk about activity, but we're actually able to get things done within the jurisdictions that we operate. Quite simply, the geophysics has identified various copper anomalies, and for the technical people, there's more detail there for you to interpret and understand. They're the information that we have, and it's the same information that our geologists have worked off to identify the anomalies associated with what we think are the opportunities. We then undertake, as everyone would, geochemical sampling of the rock chips. I think what's really interesting for us is just as, even though it's a 100-year-old mining district, there are literally just rock chips everywhere with copper mineralization. Of course, the geologists go out there and they pick the best looking bits they can find and come back and say, we've found a rock chip with a 20% copper grade. Well, of course you have. That's why you were there. So, but look, I think it just tells you that this is a highly, a very interesting area, and both the soil samples and the rock chip samples give every indication that the mineralization is there. We think there are enormous opportunities for discovery at depth. We've identified various zones, and again, the technical team have put together the appropriate computer-generated schematics as to where they think the mineralization may lay. And as a result of that, we've overlaid our drill targets, and we have 12 sites that we've identified that I think represent a great opportunity to see if that mineralization continues at depth. We have a second asset in Idaho. It's called the Anderson Creek Gold Project. To be perfectly honest, it was the first asset that we were able to peg and acquire. But at the same time, we were doing the Garnet Creek Copper Project. Garnet Creek, we think, excels and potentially has the potential to be a flagship asset for us. That nonetheless says we've also got a gold project. Very similar criteria for us to have acquired it, and that is really an historical mining district, a number of federal lode mine claims, surface and mineral control over 2,000 acres. Again, historical data and obviously selected rock chip samples demonstrate gold within the quartz. It's the same type of ownership structure managed by the Bureau of Land Management and the US Forestry Services. Power's in place, roads are in place, there's accessibility, and there's a number of interesting aspects around this project. Obviously, we've undertaken geological mapping, and we've identified numerous veins and quartz outcrops. And again, I think what's important is to show that there's been historical ground disturbing activity in this jurisdiction, which means the whole permitting and the access approach is far more likely to be successful rather than trying to operate in an area where there's never been any such ground disturbing activities. And the permitting in the US can be problematic, and therefore it's our experience that helps us identify, where to look, and if you find something, what can you do with it? And we make sure that we understand the land ownership and the permitting process to give us accessibility to any potential opportunities. Again, this slide's really just to demonstrate that over the last 12 months, there's been a particularly active work program. Again, it's to demonstrate competency and capacity and the ability to actually get things done on the ground in the west of the US within the Rockies precinct. At Garnet Creek, we've completed aeromagnetic surveys, geochem sampling, mapping and program, a JORC exploration target, and a permitting process that's well underway. We hope to get that permitting process over the next couple of months. For those of you that know the Rockies, it's clearly winter. There's not a lot of activity that's going to happen on site during winter. So we made sure that we got our summer program completed. We'll put the permits in. We'll deal with all the various questions and bumps along the way that occur with the view to having a drilling program in place and approved by the start of the summer of 2023. Same with Anderson Creek, not quite as advanced, but obviously when you're a junior explorer, pre-production, pre-revenue, every dollar you spend has to be incredibly well managed. So whilst we have our Anderson Creek asset, we'll do things that are very, very cost effective for us on that site. In terms of the workflow, that's what's taken place at Anderson Creek and Garnet Creek. And then really for the investor cohort, we are actively looking for a third asset. We understand the strategic metal space. We recognise that there's an enormous supply-demand imbalance at the moment from the US. We know the Department of Defence, Department of Energy are wanting to ensure supply and control of domestic manufacturing of the rare earth elements and processing of those. And also there's a number of strategic metals that I think people have very quickly worked out that if you want security and self-sufficiency, you're going to have to develop those assets yourself. From a corporate perspective, we are looking for a US-based managing director. You can only do so much here from Australia, whilst with ASX listed. Currently, we understand the pathway to a OTCQB listing or even a Toronto listing. That's something that's certainly in our mindset. But really, we're an American asset with American management, and we're certainly looking for an American managing director, and we're looking to add to our program of assets, or our portfolio of assets. In terms of the news flow, we understand the junior resource sector and the news flow cycle. If you're not out there talking to people in the market, as you've seen from today, there's 20 or 30 companies. That's only a snapshot of the 1,000 or so junior explorers on the ASX. And you need to have that aspect of your business model, in place and well understood, and make sure that there's something interesting to be talking to the market about on a reasonably regular basis, but hopefully talking about activities of substance that demonstrate that you're creating value within the assets that you have. So I guess in summary, for the second to last speaker of the conference, we're a US-focused and US-based exploration company. Advance Metals share code AVM is clearly undervalued compared to peers. We have acquired our Garnet Creek flagship project. We've acquired our Anderson Creek project. We've a number of strategic metal opportunities that we've identified and that we're assessing. But interesting in talking to people in this sector over the last couple of days, there are a number of stranded assets that are looking for an opportunity to become part of a strategic metals play, where the company understands strategic metals. We have people on the ground in North America, and we're able to take advantage of the Australian ASX capital markets by being listed. We're building a portfolio of strategic metal projects. We have a very experienced board and management, and we're looking to add a US-based managing director. So that's our story. As a non-executive director come executive director, is actually fantastic fun to be involved in another exploration company that is out there looking for assets in what I think is a very exciting period, particularly in the US, as they take hold of and I think undertake the next mining boom in the US. And if you don't have any exposure to the US market, it's a very known jurisdiction. There are so many advantages of working within, I guess, a tier one jurisdiction that I think gives all investors opportunities to think about having an exposure to a US strategic metals play. So thank you very much for listening, and hopefully I've kept on time. It looks like the flashing light says I've done what I could do.
You did.
So thank you very much.
Perfect. Thank you, Keith. And so to our final presentation, ladies and gentlemen, New World Resources Ltd is an Australian company focused on the exploration and development of mineral resources projects in North America. Managing Director and CEO Michael Haynes has more than 25 years' experience in the international resources industry. He has explored for a wide variety of ore deposit styles throughout Australia and extensively in Southeast and Central Asia, Africa, Europe, South and North America. Please welcome Michael Haynes.
Thank you. Thanks very much for the invitation to present here today, and I appreciate those who have attended here in person, and I very much appreciate you persevering, and hopefully I can capitalise on Keith's introduction, where I reinforce that the US is a fantastic jurisdiction to do business, and I reinforce that there is abundance of opportunities there. New World Resources for the last 3 years has focused its efforts on an old copper deposit in northern Arizona. It's in sparsely populated northern Arizona desert country. It was discovered in 1890. There was mining from between 1916 and through to 1970 only 70,000 tonnes of ore were mined through that period. A little bit of exploration was done in 1975, and over the last 3 years, we've taken an old historic mining centre and we are turning it into a very, very exciting development proposition by making the deposit bigger and by moving the Antler copper project to production. Antler is one of the highest grade copper deposits in the world. Paul Howard, analyst at Canaccord, has a database of, I think it's around 830 copper deposits. And of those copper deposits, he rates Antler the 30th highest grade copper deposit in the world. So whichever way we look at it, it's very, very high grade. And with that comes opportunity. We see it as a very high margin development proposition because of the grade. And so in low copper price environment, we will be able to make money. But in the foreseeable future, where we expect a much higher copper price environment, we will make extremely good money. And I'll run you through some base case economics as I talk through the slide. Just corporately, we've got a market cap of $61 million or thereabouts, with about $6 million cash in bank, a little bit less having spent over the last month since our most recent quarterly. I would say we are heavily undervalued given the asset base that we have, given the cash flow potential we are proving, and given the enormous exploration upside that remains. The Antler deposit is located up in northwestern Arizona. It's about 2 hours to the south of Las Vegas and about 3 hours north of Phoenix. It's in a very sparsely populated area, which is a real positive for bringing a project into production. Typically in the US, the closer you are to population centres, then the more problems you have. Where we are, we're 15 kilometres from a town of a couple of hundred people, and along the road that leads from the town of Yucca to our project at Antler, then we see 9 or 10 dwellings along that road. It is sparsely populated, and indeed a lot of those people are applying to us for work. So we have a supportive local jurisdiction. But not only that, we have fantastic infrastructure. We have an interstate highway that's running through that town of Yucca. We have transcontinental rail, and 40 kilometres to the north of us is the town of Kingman, where there's 30,000 people, a skilled workforce. Great place to be doing business, a great place to be building a mine. And indeed, these attributes will mean that our capital cost of development is low and our operating costs will be low because this infrastructure is already in place. And where we are, it's a proven district. Our style of deposit is what's called a VMS, a volcanogenic massive sulfide. Many of you in the room would be familiar with Samfire's DeGrussa deposit, same style of mineralisation. These are typically polymetallic deposits, as is ours, typically high grade, and with the high grade comes opportunity. And indeed, with the high grade also comes the opportunity to build a relatively modest CapEx mining operation. Previously, as I said, Antler was discovered in 1890 and it was mined through to 1970, but only very small scale mining. So over that period, only 70,000 tonnes of ore have been mined. But what caught our eye was the grade of that mineralisation that was mined. Almost 3% copper and 6% zinc, or around about 5% copper equivalent. Very, very high grade mineralisation. That's why we looked at this opportunity when it was presented. It was just over 3 years ago. But more significantly, in 1975, several exploration holes were drilled on very wide space drilling, and they discovered mineralisation over 600 metres of strike, 550 metres below surface, all of which was massive sulfide, high-grade mineralisation. And that's what tipped us over the edge and got us involved. We saw that that was a base case for a much larger system than the 70,000 tonnes that had been mined previously. So we secured the rights to acquire 100% of the Antler project in March 2020. We had a 4-year option to acquire 100% interest. And we set about, a week after executing that agreement, we set about exploration. We started drilling just as COVID hit. And I think our entire team will vividly remember it. It was quite a difficult decision to make whether our team should actually be in the field or whether they should be back home with their families. Fortunately, the team decided they were best to be drilling, that probably remote northern Arizona was the best place they could possibly be. And so our team started drilling in March 2020. We have not stopped since. This is one of the rare occasions where the project has got better and better the deeper into the project we go. Normally as explorationists, and most of the stories we've heard over the last 2 days are exploration stories. Normally as explorationists, we drill some holes,
get some results, make some decisions, and sometimes go back to that project and sometimes we'll have another phase of work program. This has been one consistent concerted work program since March 2020. We have not stopped because the results get better and better. Now, I don't want to dwell on the details, but what I will look at over the next couple of slides is this grade thickness long section. It's illustrating the number of meters that we've intercepted in drilling times the grade on a copper equivalent basis. And to put it in perspective, red zones are greater than 40 copper percent meters, and magenta zones are greater than 60 copper percent meters. So to be in the magenta zone, we would have had to intersect 15 meters at 4% or 10 meters at 6% or better. So it's got to be very, very high grade and very thick mineralisation to make it into the red magenta zones here. We started drilling in March 2020. By October 2021, we were extremely confident we had a viable mining operation. So we exercised our option early. So we took 100% ownership of the project. So the project could never, the terms of the acquisition could never be changed and the project could never be taken from us. So no matter what happens in the equity capital markets, New World will remain the owner of this project. A month later, we declared a maiden resource on the project. And that resource was 7.7 million tonnes at 3.9% copper equivalent. Now that 3.9% is on a metallurgically recovered basis. So if we took 100% of the elements in that equation there, we would be reporting 7.7 at 4.6% copper equivalent. Doesn't matter which way we look at it, it's very high grade. And equally, the confidence in that resource is that 74% of that resource is indicated. So there's a high confidence level in that. That was the status of the project in November 2021, so 12 months ago. Since then, we've used that resource to undertake a mining study to outline some potential economic parameters. But equally, we see that there's value to be realised by making the resource bigger and bigger. So we've continued to drill deeper and deeper. Indeed, in the last 12 months, we've drilled another 45 holes underneath the limits of the information that we had for that resource. So the resource, the November 2021 resource had 75 holes. We've drilled another 48 holes underneath that resource. Next week, we will announce the results of the updated resource. And it will be another interim resource because the mineralisation remains open at depth. But what we can see here is below that black line, we have continued to intersect very thick, very high grade, very predictable mineralisation in two subvertical shoots that we call the main shoot and the south shoot. So unequivocally, we have substantially increased the resource base. The impacts of that are that we should be able to improve on the base case economics of developing a mining operation here. But notwithstanding that, we need to demonstrate the economic viability, de-risk the project by going through scoping studies, pre-feasibility studies, definitive feasibility studies, and through mine permitting. So in order to do that, over the last 6 months, we've compiled a scoping study into the potential development of a base case scenario just on that November 2021 resource. So just on the 7.7 million tonnes, grading 3.9% copper equivalent. And the base case is such that of that 7.7 million tonnes, we have a mine design with a mining inventory that sees 9.3 million tonnes delivered to the mill. And that might seem unusual, but the reality is that 95% of the resource base is captured by the mine design, and the material around it, which is nil-grade dilution, is also delivered to the mill. So that sees us deliver to the mill 3.3% copper equivalent ore. We use about a 1% copper cutoff, whether it's marginal, whether it's economic and sub-economic. So that's sort of indicating that we've got around about 2% copper equivalent profit. Very good margins. This production profile, and I reiterate, this is based on a stale resource. This resource is 12 months old. This sees us deliver about 271,000 tonnes, or produce 271,000 tonnes of copper equivalent metal over an initial 9.5, 10-year mine life at a rate of about 1 million tonnes per annum. Very modest capex, $200 million US capex. That's a capex that New World itself can manage in its own right. We are likely to attract 60, 65% debt for the economic parameters of this project. So it's not a huge burden for New World to fund the equity component of this development in its own right. With these metrics, we see revenue of about $2 billion and free cash flow of just under $1 billion based on that 7.7 million tonnes, which if we discount that over the 9.5, 10-year mine life that we've got, that discounts to about $525 million pre-tax. The production profile sees us produce around about 30,000 tonnes of copper equivalent metal, of which about half is copper itself, and the rest are byproducts of zinc, silver, gold, and lead. On a cash cost basis, if we think of copper equivalents, the cash cost basis is $1.66 a pound, and I've converted that to tonnes, $3,600 a tonne of produced metal. Today's copper price is about $8,000 a tonne, but let's use $7,600 a tonne. So on a cash cost basis, if the price is $7,600 and the operating cost is $3,600, our margin is $4,000 a tonne on those metrics. And just to flick back to the previous slide, we anticipate producing around about 30,000 tonnes of copper equivalent metal a year. So that's 30,000 tonnes times $4,000 a tonne margin. It's $120 million a tonne profit each year that we're in production on this base case scenario. And we think this base case scenario will get better. On a pure copper only basis, we have a negative cash cost. So the value of the zinc, the value of the silver, the value of the gold, and the value of the lead more than pays for the cost of operations. So we are mining copper that's running 2.2% copper plus 5% zinc, and we are getting paid for the full 2.2% copper, essentially. It is one of the lowest cost copper producers in the world, or it will be. And that's, again, on a base case scenario. The bigger the project, the lower the operating costs will be. And we've clearly demonstrated that we have got a bigger resource, and I firmly expect that we will have lower operating costs than these because we will get economies of scale. I anticipate that we'll be producing at a rate faster than 1 million tonnes per annum, which itself means that we will be producing more metal at lower costs, and so the economics are just going to get better and better. So in order to do that, then we have been focused for the last 12 months on continuing to expand the resource base, because expansion of the resource base sees us give us the optionality to do two things: extend the mine life, and most importantly on the NPV is to have a larger production profile. So with the imminent resource update that we will be putting out, we intend running a new mining study, a new scoping study initially that should be delivered in February, March next year. That should outline more positive economics, but we will continue to expand the resource base because the resource is completely open at depth. So at depth, the two deepest holes that we've got in our two main chutes. In the main chute, the deepest hole in the project, 900 metres below surface, is intersected 21 metres at 5.5% copper equivalent. And in the adjacent south chute, we've intersected 27 metres at 7% copper equivalent. This deposit has not stopped. It remains completely open at depth, and we continue to drill test the depth extent. In fact, we've got assays pending for 4 holes from deeper drilling. But equally, along strike, there is potential to discover additional mineralisation. Several months ago, we disclosed results from some soil sampling that we'd done along strike. So we have secured the land holding of identical geological sequence at Host Antler to the northeast. Several months ago, we delineated these copper anomalies in soils at Rattlesnake Ridge, Copper Knob Insulator, and Westworld. Over the last couple of months, we've undertaken IP over those targets, and several days ago, we announced that we had coincident IP and soil geochemistry targets where there's not a single drill hole into them. These VMS systems, they typically occur in clusters. Where there's one, there's normally 2. And indeed, in our case, there's one to the northeast at Copperworld that you can see on this map on the right-hand side that we don't currently own, but there's definitely 2 in this belt. And where there's 2, there's highly likely there's going to be 3. Where there's 3, there may be 4. Any additional tonnes that we can define at these these deposits can be sent to a centralised processing facility. We're only talking about 6 kilometres away, so they can be trucked to a centralised processing facility and further enhance the economics of developing this project. So from here, what have we got coming up? Next week, we'll have a JORC resource update. We'll feed that into a scoping study that should be delivered in March next year, February, March next year, that will outline even better economics than those that are currently published based on the base case resource. We continue to drill. We continue to drill at depth, and in January, we'll start drilling those along strike targets that are coincident IP and soil geochemistry along strike to the northeast. We'll be lodging mine permit applications, and we continue to de-risk the project by undertaking pre-feasibility study that we anticipate will lead into a definitive feasibility study. In conclusion, I'd like to say grade is king. That's an old adage in the exploration game, but clearly at the Antler, we can say grade is king because this is such a high grade deposit that it doesn't matter what the copper price environment is likely to be, then we will be a profitable producer. And very rarely do we come across projects where things get better as we go along. When we acquired this project 3 years ago, we thought we would have a very good development proposition if we could be mining at 400, 500,000 tonnes per annum at grades of around 4% copper equivalent. 8 months later, we were targeting 800,000 tonnes per annum. Scoping study has demonstrated 1 million tonnes per annum. And right now, I think it's realistic for us to be thinking about 1.2 to 1.5 million tonnes per annum. It's an excellent jurisdiction at a fantastic time to be in the copper space. So thanks very much for your attendance today.
Thank you very much, Michael. And that brings our conference to an end. We hope that you found some things to get interested in by way of investment and keep an eye on it. Big thanks to Jed Lovin and James Morrison on the desk down at the back. They stepped in. Shane was ill this morning, so the team stepped in. So give them a big round of applause. They've done a great job all day. All right, that's it from us, ladies and gentlemen. We look forward to the next conference, which will be